We are back at it again here with another video with Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. Here we are at MULLEN stock, Mullen Automotive Inc. doing a full transition from February 21st all the way up here at 28 cents of bright green bars on 42 vision to the dip area here today of white with red borders. Now, we have seen a pullback, and it wasn't the only stock experiencing volatility and pulling back in the first half of the day. And our SPY bot sent out a bear indicator at 10:45 a.m. And from that moment forward, outflows crossed the midpoint to the downside. Pure weakness there on 42 vision, and put options went up 200% plus within minutes to an hour, guys. If you guys want to receive this clarity and edge of the charts, you can now gain access to it as well. The link is down below in the description to the 42 vision indicator, getting connected over to our bots and becoming part of a growing community of investors, all looking to learn and grow together by receiving this clarity and edge over the charts and using these resources to maximize in either direction, whether stocks are going up or going down. So here we are at MULLEN stock doing a full transition. We need to talk about what's going on within the charts, the bull and bear indicators, and inflow versus outflow. But before we do, I want to share with you guys the home run opportunity that was mentioned this morning over at the Discord. So the home run of the day was spectacular and beyond expectations. And if you guys want to know about these stocks early on and receive this clarity and edge of the charts, you can now gain access to it as well. The link is down below in the description to the 42 vision indicator, getting connected over to our bots and becoming part of a growing community of investors, all looking to learn and grow together. So the home run of the day was from our Tesla bot. Our Tesla bot at 9:45 a.m. sent out a bear indicator. From that moment forward, outflows crossed the midpoint to the downside. Pure weakness there on 42 vision, and put options went up 100% plus within minutes to an hour, guys. If you guys want to receive this clarity and edge of the charts, you can now gain access to it as well. The link is down below in the description to the 42 vision indicator, getting connected over to our Discord and bots. We look forward to having you join us, and we strive for opportunities like these every single day. Let's jump into these charts. So here we are with MULLEN stock, Mullen Automotive Inc. doing a full transition from the bright green bars to white with red borders, as I stated earlier in the video, on 42 vision. And if this is your first time coming across the channel, this is 42 vision, which allows us to see the dips from the rips to the dips, and where the strength and weakness lies within the charts. And we also use our bull and bear indicators and inflow versus outflow as an extra layer of confirmation, which I'm going to pull up here, and you can now gain access to it as well. The link is down below in the description to the 42 vision indicator, getting connected over to our bots and becoming part of a growing community of investors, all looking to learn and grow together by receiving this clarity and edge over the charts and using these resources to maximize in either direction, whether stocks are going up or going down. And in today's video, I'm going to pull up the inflow versus outflow indicator, which adds that extra layer of confirmation and gives us that edge within the volatility. So here we are at MULLEN stock, Mullen Automotive Inc. under a bear indicator since up here at around 38 cents back on February 14th and 15th here in the aftermarket hours going into the pre-market. And there's been pure weakness here since that date, as you could see there. And outflows have been dominating all this time. Now, I've talked about this before on the 1 hour chart, how these outflows have been dominating for some time. And even when we were going up, right, pushing up from 28 cents, 26 cents, back up to 44 cents. In this whole entire upward push, outflows continue to dominate and be below the midpoint. And even in the previous run, from 20 cents to 47, and back here at 19 cents to about 39.40 cent area. Outflows have dominated in the most recent runs, and this is super important because the longer it stayed below, if the inflows didn't pick up, even if they did not cross, right? I've always pointed out, at least try to see it go from red to green towards the midpoint. Well, then that means that in the bigger picture, these outflows were going to have some weight on the volatility of the chart, right? And it's had it. When every time it goes up, comes right back down, comes right back down, comes right back down. This bigger picture weight has been crucial Everything else, volatility in between, and we've seen it on the 30-minute, we've seen it on the 15-minute, and the last time that inflows actually crossed over on the 1 hour was back here, followed by that bull indicator at 21 cents, all the way up to 45, back down to 35, 34 cents, back up to 64, and both times the inflows crossed over, right? And they were the highest that we've seen in months and weeks. Now, at that time, it was squeezing. That was the speculation. Why? Because short interest was going lower while the stock was going higher. The inflows were going higher, and the Ortex data and Fintel data was showing the information that short interest was going down, creating the possibility and speculation that shorts were getting squeezed. Now, a lot of people have speculated in these last several runs that shorts have been squeezed out of their positions, but the inflow versus outflow has shown us the difference, right? From the last runs to where we're at now, right? That the shorts have not been shaken out completely because these outflows continue to dominate and we continue to get pushed down. Now, what made it run recently as we were pulling back here, right, in January was the announcement of the CEO stating that they do not see a need for a reverse split at the time, right? In January and beginning of February, they had stated this at that time of necessity, right? No necessary reverse split, and that they do not see themselves proceeding as a company to do that at that time. Now, time has gone by and it's coming closer to the deadline of the NASDAQ listing compliance. I've talked about this before. I talked about it last year, and I talk about it to remind those that are coming across the channel for the first time and those of you that watch my videos that MULLEN stock has been at the risk of a reverse split. Some people like that, some people don't. Some people think that a smaller float is great and they don't see it as dilution. Me personally, it's one step closer to dilution, and if it doesn't dilute it, well, it gives the opportunity to dilute. Why? Because now the stock is back over $1, and then it could go ahead and create itself opportunities as a company to do offerings. Now, offerings are not negative if they're going towards the future growth and possibility, in my opinion, of a company's growth and opportunities. But constantly offering and no product or progress, well, that could be concerning, in my opinion, as an investor. So I wanted to get that out there, let you guys know the risk of a reverse split is a lot higher now at this time, the closer we get to the deadline. And even if the deadline gets pushed back, which some people are hoping on, it still creates the possibility of the stock being below $1 and putting more pressure on the CEO himself to make that decision, even though they're no longer worried about NASDAQ compliance because it got pushed back. Well, the stock is still below $1, and how do they get themselves an opportunity to do an offering, right? So that is something to not ignore and miss here on what's going on with the speculation and the risk of MULLEN stock under $1. Now, a lot of great things have happened for MULLEN stock with their products and the growth and their partnerships and the directors that have came over, but we still can't overlook where the chart currently sits and the risk that it's at. So I'm going to share with you guys the key levels I would watch going into tomorrow. And the first thing is 23 cents, as I stated yesterday, critical level. Below that, 20 cents. And if these outflows continue to the downside, as outflows are dominating right now, and it's under a bear indicator, it's going to be crucial to watch that 20 cent to the 52-week low area of 18 cents. If things get very bearish, I would also watch that 15 cent area between 18 cents and 15 cents. And then if we look at the 15-minute, we could see that the inflows are above. So I would be watching this very carefully going into tomorrow. Do they stay above or do they come right back down to cross through the midpoint, as it does not have a bull indicator just yet in the current move? So that is something to not overlook and keep in mind within the volatility. And on the 30-minute, if things are going to the upside and there's further strength here because the inflows are really close, even though outflows are dominating, well, it needs to cross over that midpoint, push to the upside, right? And then the next level I would watch to the upside is 27 cents. And then above that comes the 30 cent to 33 cent area. Those are the key levels I'm watching to the upside and to the downside. And if any possible move to the upside happens, I would also be looking for that inflow crossover in conjunction with a bear indicator getting canceled with a possible bull indicator, guys. As always, guys, thank you guys so much for watching, and let's make some money.